Welcome back. President Trump on Air Force One moments ago. The president said this: "I am not here to negotiate for Ukraine." The president is en route to his high-stakes meeting with Vladimir Putin right now. We will bring you more headlines from the president on Air Force One as we get there. Meanwhile, the Securities and Exchange Commission is launching Project Crypto, a sweeping new initiative to modernize rules and regulations, enabling America's financial markets to move on-chain and make America the crypto capital of the world. Joining me right now in a Fox Business exclusive is the chairman of the Securities and Exchange Commission himself, Paul Atkins. Mr. Chairman, it's great to see you. Thanks so much for being here this morning. Do we have Chairman Atkins? Mr. Chairman, I want to get your take on Project Crypto. You have said that the SEC will not stand by and watch innovations develop overseas, that it's going to happen here. Can you walk us through Project Crypto?
Well, sure, Maria. And again, thanks for having me on today. A couple of weeks ago, the administration issued the President's Working Group's report on digital assets in the United States. And there were clear directions to the SEC. We're part of the PWG, that President's Working Group, and clear recommendations for us to go forward and help make what the President has announced, his intention to make America the crypto capital of the world and have the world run on American technology. So we're mobilizing at the SEC all our different divisions and offices to focus on making that announcement become reality. So that's with our Corporation Finance Division, Investment Management, and others. We're focusing on what we can do to make the regulations of the SEC encompass the crypto assets and also make it so that people can have some clarity going forward. We're working with Congress. Obviously, the Genius Act was enacted here a few weeks ago with a big announcement at the White House by the president himself, and as he signed it. So that, I thought, was a very good step forward. And now there are other bills in Congress that are being considered, and when they return from their recess, I look forward to much more forward progress.
Yeah, and in terms of that progress, you made remarks, I guess, right after confirmation with respect to crypto custody. Talk to us about that. I mean, you said that the Securities and Exchange Commission needs to revise the current framework. You wrote, you said that the changes needed to the custody rules under the Exchange Act, Advisors Act, or Investment Company Act to accommodate crypto assets and blockchain technology. Tell us what that looks like once, in fact, you take away what has been strangling corporations to have this progress.
Well, so the issues around custody are very important, and for good reason. We don't want just crypto assets be on some flash drive in somebody's drawer. They need to be in a secure place, and especially obviously if they're held for investors. So we are looking at the rules that have been around for now, 90 years or so, and make sure that they are adaptable and adapted to the modern world and to this new technology. So that will have effects on broker-dealers and asset managers and investment advisors and so forth. So that is one of the top priorities. But the main reason for doing all this and addressing these various regulations is to provide some certainty for people, because for too long now there was a lot of guesswork, and there was a very, I would say, a hostile environment as far as people trying to innovate. Lawyers couldn't give their clients opinions as to what was legal or not, and the SEC and other agencies sent very shifting views as to what was undergirding their view towards crypto assets. And so we are changing that, and so our goal is to give clarity and certainty. It will be undergirded by whatever comes out of Congress, but I believe that we have authority to move forward in these areas and provide that certainty and clarity for people.
Yeah, and on crypto payments, I thought it was interesting that this week a North Dakota federal judge voided the Durbin debit interchange rule and concluded that the Federal Reserve set it above what Congress required. And there are analysts this morning saying that this is a positive for alternatives payments options. And that includes crypto payments, right, Mr. Chairman? So I want to get your take on that. Instant payment networks like a real-time payments or FedNow, these are options that convert payments into same-day transactions. And I know the Genius Act also furthered this. Do you have a vision in terms of how this changes people's lives in the coming years?
Well, certainly. This is a way to de-risk the markets because the longer that it takes to have clearance and settlement of transactions, the more risk there is in the system for something to go wrong, some black swan event to send things out of kilter. So if we move towards delivery versus payment, payment versus delivery in real time, obviously with some delays to account for mistakes or whatever fat finger mistakes to be built into the system,
yeah.
But with a goal towards having pretty much instantaneous settlement and clearance, that would be ideal. That's what the blockchain offers, so a transparent mode to do that. And so I think that will deliver huge benefits to the marketplace that we probably can't even calculate right now.
Well, it's incredible, this moment in time that we're in, Mr. Chairman. And in addition to all of your work on crypto and on digital assets, you've also discussed easing back or changing regulations when it comes to private companies. And I want to get your take about opening access to private companies and equity for ordinary investors. Of course, President Trump recently signed an executive order to open up 401k retirement plans to invest in private equity as well as crypto. Mr. Chairman, what are your thoughts in terms of how this changes options for investors? And what would be the goal here in terms of giving investors access to private equity?
Well, thanks, Maria. That's a great question because the marketplace has changed a lot in the past few decades, where the number of public companies now is half of what it was, say, 30 years ago. And the private market has really grown tremendously because there's a lot of capital out there looking for deals to invest in. And so the biggest thing that investors should remember about investing and the difference between that and, say, gambling is, you're helping to construct something in the economy and helping to grow the economy. But B, you need to approach things with a diversification goal in mind. Don't put all your eggs in one basket. That's one of the axiomatic bases for long-term investing. And so for investors who are looking to bolster their retirement savings, it is good to have diversification and to be where it's not really great to have a situation where large endowments and pension funds, like state pension funds and whatnot, can be diversified in the public and private markets, but 401ks cannot. And I think that's one of the goals of this executive order, to direct the Department of Labor and the SEC for us to work together to help make that a reality. But with proper guardrails around things, we can't just like fling the gates open and have investors rush in, where one has to be careful and you have to know what what the kind of the shoal waters are, that you don't run aground your boat on that. And some of that is the fees that are in some of these products, the liquidity issues. You can't get out in a heartbeat versus where you can in the public markets. So there has to be proper allocation, and investors need to know what they're doing and have advisors who also know what they're doing. So that's one of the goals to ensure that.
I like this way of thinking because, I mean, look, it's a great option, because there are some great growth stories in the private sector, but you're thinking about the guardrails that need to be in place to protect investors if, in fact, they do choose to go that route. Mr. Chairman, let me switch gears, ask you about President Trump trying to think about monetizing the government's stake in Fannie Mae and Freddie Mac. I broke the news earlier this morning that Wall Street is now cozying up to President Trump to try to get that piece of business. A lot of analysts are expecting this is going to be a $30+ billion deal as the government sells its stake in Fannie Mae and Freddie Mac. We're expecting that to happen later this year. Mr. Chairman, what kind of hurdles or what kind of information do we need to understand about this potential largest IPO we've ever seen, which could come to the market? And these are important companies, mortgage originators.
Yeah, well, I leave that again to the president and the other agencies. We are focused on disclosure at the SEC, and so with respect to that, I think there are many things to be worked out. Is there a government guarantee that will remain? How's that priced in, or how's that dealt with respect to the company? So we'll see. We're there. We stand by to help and to make sure that that we're doing our job as far as looking at the disclosure and helping that transaction come to pass if indeed the administration decides to do that.
Understood. I mean, the idea is that the GSEs stay in conservatorship, but, there are issues that we want to talk about, shareholder rights, control of the board of directors, et cetera. Mr. Chairman, it's great to have you, and thanks very much for your leadership and for being here this morning, sir. Thank you.
Thank you, Maria.